Great question. I would say either when the warranty is about to expire, when you have a major repair coming up, because obviously dealers can take care of those costs internally for a little bit cheaper, get you a little bit more for your trade-in, try and help you out in a different situation. Or basically when the vehicle's just starting to feel unsafe and unreliable is usually kind of the best time and the most consistent time when people trade cars in.
Well, I think using online sources for a general value is a good idea. You know, it's also it's just a culmination of data, and so every car is going to have a different value based on, you know, tire wear, or the rims damaged, how is the paint, does it have any door dings, is there any interior smudges. But more times than not, we're surprised when we actually get a chance to see a car in person that we're actually able to pay a little bit more for it, because maybe it's of a particular equipment level that's really desired. Does it have navigation, sunroof, leather interior? Are the tires like almost new? Does the car need almost no reconditioning because it's in such good shape for the customer? Those kind of cars, we often surprise people by able to give them more rather than less. And then sometimes the opposite is true, where someone describes their car as being near excellent, and then they come in and it, you know, it looks like it got hit by a truck. So we have to, we definitely have to see it in person to make the difference.
We want to do a physical inspection because we'd like to make sure the customer gets the most money for their trade-in. We have guidelines just like they do with Edmunds and Kelley Blue Book online, but if there is a car that is immaculate, mint condition, or just plain above average, we don't want to give average money without seeing it.
Well, the first benefit is the tax savings. See, this is one thing that customers don't know. So if you trade in your vehicle, and let's say it's worth $10,000 and your tax rate is 5%, you get $500 of tax savings off your bill. So you're buying a $20,000 car and your trade is worth 10, you only pay tax on 10. Okay? If you trade it without a trade, or if you buy a car without a trade, then you're looking at a full tax bill. Also, too, convenience. It's obviously very convenient to do that. And then two, the third thing would be, you know, just dealing one-on-one with a consumer. If you sell a car on Craigslist or to a neighbor or a friend, and something bad happens to that car, that friend or that person doesn't like that very much. Here at the dealership, once you trade it in, we don't call you back.
Yes, that actually probably happens most of the time. Nowadays, people tend to trade in between 2 and 4 years, so most likely they'll have a balance on their vehicle, and you know, that's very common to trade in.
Absolutely, you can, and we have that happen all the time, and the benefit of doing that is we can actually get the parts and the labor and everything done cheaper, so we can actually ultimately give you a little bit more for your vehicle than if you were to get it done somewhere else and then trade it in, because obviously we have the internal labor rates and we know exactly what the vehicle's worth with and without those repairs being done.
Well, I'd like to say that, you know, that Russ Darrow, the way we appraise our vehicles, see, most, I don't want to get too technical for you, but I'm going to start. So we use a software program called vAuto, and what vAuto does, it doesn't gauge our profit. It gauges on what vehicles are selling for, and that's really big because a lot of dealerships will take in a car for 8 and then go, okay, can I sell it for 11? We don't do it that way. We take in a car based on what it's worth and what the market brings, not what a book says or what some arbitrary person says. It's what we think it will sell for, and then we adjust accordingly. So it's not, we don't center our whole business model around profitability. Obviously there is some, but we do it more on a market-based than a book-based.
Well, I think the big advantage that Russ Darrow has is simply having 15 locations and being one of the largest volume retailers of used cars in the state. And we have a natural demand for it. You know, we have a great reputation of taking care of our customers after the sale. And even if something minor goes wrong, you know, we try our very best to take care of the customer once they've purchased a car from us. So we constantly have a demand. And so if dealership one that you take it to at a Russ Darrow, they may or may not have an immediate need. They can contact the other dealerships. We have a network of looking at the vehicle to make sure that we can give top dollar for that car, because it might be more appealing to, you know, one dealership in our group versus the other. As an example, if you traded in a Honda, at a dealership that's not a Honda store. We have a good sized Honda store that's always looking for Hondas, always willing to pay top dollar. We can contact the Honda store and have them look at the car. And it goes the same way with all the franchises that we offer. And with us having so many new car franchises, we have a lot of demand for used cars. So we typically can get the deal put together if a customer's reasonable what their car's worth.